Welcome back to the Johnson Wealth Advisors podcast. I'm your financial planner, Elwes Johnson, with Johnson Wealth Advisors here in Lakewood, Washington. I got with me again my good friend Ezra.
And I'm Ezra Davis. I own a company called Leggett, where we help you start an LLC, S corporation, and provide you operating agreement or bylaws.
So today we got a topic that's been coming a little bit from a couple people in the same week. So this was last week that these things came up. It was new love. So, Valentine's Day, you guys all got proposed to or did the proposing. And now with that new love, it's great. I love that person. Now I want to spend the rest of my life with that person. I want to merge my life together with them. Part of that life is money. And the question that got brought to me is, do I make joint bank accounts with them? Because I have my little nest egg, my little bits of money already, but my money is mine. and their money is theirs. I've been, doing it on my own. Can I continue to do it on my own? Do I pay some of the bills? Do they pay some of the bills? Do we merge it and now we pay it out of a joint account? They were just, really up in the air about all that.
That's a good point, actually. What did you do when you got married?
So I believe, and this comes for me in a biblical sense too, you merge your life together as one. Okay, so what's mine is hers, and what's hers is mine. Not like some people like to say, I've heard in the office, what's his is mine, and what's mine is mine. No. Well, it's ours, right? Now, that doesn't mean to me that there can't be any independence.
Yeah.
Okay, so, and this comes from, so I guess I should give a little background. I think you know most of this, but I've spent years in the bank. I was your personal banker, helping you set up your personal accounts and get your credit cards, and creating an account for your kids to go to college. I've done that. I've managed the accounts and trained those bankers to do that. I've been the business banker in the banks as well, and I've been the person to talk to them about investments in the banks. They got me licensed. That's how I initially got started getting licensed, because the bank made me. But I ended up loving it, and so here I am. So I've sat at that banker desk, and I've had this conversation with people thousands of times.
Wow, nice.
Okay. I've seen it work very well having totally separate money, not one joint account. I've seen it work very well having joint accounts. And in the same vein, I've also seen it work horribly both ways too. So this one's kind of hard because I don't think there's a right way to do it. It just depends on you and your spouse. So to answer your question, what did I do? I had what I call the castle. So the castle's accounts is the joint account. We definitely had a joint account, okay? And that joint account pays all the bills. Even today, we have a joint account. Pays all the bills. If it's household something, that's one debit card, for me. I just happen to have, I got it through my bank, it's a Darth Vader debit card. So if it's coming from the castle, I bring out the Darth Vader debit card. If we about to go out after this and I'm gonna buy us a beverage, well, I'm bringing a different debit card out for that, because that's my play money. That's what I call the mama don't know account. Mama knows, but it's still the mama don't know account. And she got the papa don't know account, even though papa knows. Now, whether people are on those accounts or not, whether she's on mine and I'm on hers, doesn't matter. It's not like money's being hidden from one another. And I think that's where problems can happen. But so no, we do have a joint account, but we also have our own individual accounts as well. And we have allowance, literally allowance. My allowance is the same as hers. So we literally have an allowance for spending. And if we need to go over our own personal allowances, then I have to go to her for approval. And she has to come to me for approval.
Wow.
So
this is something we never actually talked about before. And it's crazy that your household pretty much runs like mine.
Okay.
And so we also get an allowance, my wife and I, and you don't have to answer any questions about what you do with this money.
Right.
Right. As long as you're in budget, you can do whatever you want.
Whatever you want. Yep.
If you want to pull 250 out and store it in the basement, that's up to you. It's your money.
Right.
And anything after that, my household runs on 2 yeses. So we both have to say yes to that spending or extra spending.
Okay.
And so, no, that's a really good, I think that's a good way. I couldn't imagine having 2 separate accounts and then trying to run the household that way. Like, I don't have 2 separate accounts. My wife and I have our one account. All the money goes into that account.
Okay, so you don't even have a separate spending money account.
We could, if she wanted to put her 250 in there and I wanted to have an account, 250 in there,
Right.
I could.
Okay.
Right?
But as of right now, it's all just in one
Just
account.
in one.
Okay.
Because for me, it's like, when I do my expense report, I'm not gonna lie, I'm a little lazy. So I'm not gonna pull this account and this account to do my expense report, right?
Gotcha. We'll see that in that vein. I mean, again, we talking to the business formation man. I'm gonna talk about him like he ain't here. We talking to the business formation person. He's pulling expense reports on his personal account. So I don't do that on my personal account.
Okay.
And when it's my play money, I can not know where it went because it's play.
I got you.
Whether I went to the casino with it, whether that went to the restaurants with it, or to the bars with it, or whatever happened with it, I don't need to have an account of that money, so to speak, because I basically know where it goes. I know I go to the movies, it went to candy, it went to popcorn, it went to the bar, it went to chicken wings. I know where it went, but I don't go back and double and track that. And just like I'm saving up for a motorcycle right now, so some of my allowance goes to my own savings account,
Right.
because that savings account is part of my personal. And so I'm saving up for my motorcycle because that's a toy. That's not going to benefit the family. That's my toy. So that's coming out of my savings, out of my allowance.
So how we do it, we have like a bucket in the savings account. And so whenever I put money into the savings, I can say whether this is towards a new car,
Okay.
towards vacation, towards something Ezra is looking forward to.
Gotcha.
Right?
And I know a lot of banks will have like a money map. So it's one thing when people say, oh, well, I don't know what I spend my money on. I get a lot of that too. It's like, well, first, just go to your money map, whatever bank you bank with, money map, spending report, whatever they call it, and it'll show you. And man, I remember the first time I looked at that for me, like 2010, maybe 09. My gosh, I did not realize how much I ate out. Like I ate all of my extra money. It was absolutely crazy. And I didn't think I had that much extra money. And I'm like, oh yeah, Jack in the Box got me.
Yeah, that's why I do an expense report. Because
Okay.
it helps me regulate what I'm spending my money on. And while it's my money and I don't have to account to my partner, I would still like to account to myself about what I'm doing with that money. So for instance, if I'm just blowing the $250 and all I'm doing is eating it, right? Sometimes I'm like, yo, can we do something else with that?
Right.
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 Other times it's like, hey, I'm happy I did those things, right? Because it's like cigar lounge, and like that's me spending time with people I
Gotcha.
care about.
Yeah.
And so that stuff is okay, right? It's just when it becomes the whole, like everything I did was just that. I didn't do anything to set myself up for future. I didn't do anything to save for my motorcycle, save for whatever. All I did was use it to just play. And yes, I should be able to play.
Right.
And I had a hard time at that when I
Okay.
first got married, right? Because I was buying comic books, video games,
Okay.
it was gone. I feel like it was the first 2 weeks and I was already like, oh, spending money over.
Well, until I got married, I didn't realize how much it costs for women to go get their nails done.
Oh, for real. Our haircuts.
Man.
Right? My haircut was like $30, right? Like,
I never knew that women can go spend $100 on nails.
Right.
I just didn't think it cost that much. Okay. But I had no basis for knowing that. It just was. And so when we first started out with our play monies, again, way back when, it was $100 each. I didn't make good enough money back then, but I still knew that we needed to play. was like, all right, $100. Let's start with that. And she said, that's like one trip to the nail salon and I have no money. And what are you talking about? So, because again, my haircut money didn't come out of my play money, that came out of the house. Because that was, again, we sat down and categorized everything. So we still talked about it all.
So you created a budget.
Oh yeah, 100%.
So
100%.
So would your advice be that new people, like newlyweds, should create a house budget?
Yeah, they need to talk about that. I mean, because perfect example, just talking about haircuts. A haircut might seem to someone like it's a unnecessary expense. To others, it may seem very necessary. It may be a personal expense, or is it a household expense? And there's no right or wrong answer.
Or whatever, yeah.
Yeah, there's no right or wrong answer. That's just between that couple. Because, in literal example, in the same vein, I don't use feminine products. So why should that come out of the household money? Because that's upkeep for her, right? And so why does that need to come out of her play money? So we discussed all of this stuff and said, no, that's household. That's necessary. So that's household money. We literally said the play money is the unnecessary play. It would be nice to. And so that's why the nails went there. Getting your hair done, no, we need to do that because I need to look good for you. You need to look good for me. We need to date each other. And also in the household budget was one date night a month.
Yep.
Because we still have to date each other. The things that I did to attract you, the things that you did to attract me, we have to keep that going. So hopefully we can get to a 50-year marriage, so that we deemed that as necessary. And me going to the movies was unnecessary. I love to go to the movies. It's not necessary to the house. Okay?
Right.
I love that movie popcorn, but it's not necessary to the house. So it's a 100% conversation. And again, no black and white rules around that. In the same way as there is no black and white rules around what amount should be in your savings account.
Really? You don't think like you should have like an emergency account with like 6 months of savings as a newly
Well, what is 6 months of savings? Is it 6 months of income? Is it 6 months of expenses?
I feel like it's expenses.
Okay. Other people feel like it's income.
Really?
Okay. Is it 6 months if it's just me? I'm a single man. I'll go make it happen. I don't need 6 months. I'm willing to live a little bit less than 6 months. But if it's me and 7 children, I might need a little bit more than 6 months to make me feel good.
I see what you're saying. You're saying that you have to look at what your life will afford you and then do that. I got you.
Right. And so, single person, a little less than 6 months, does that make you feel okay? Married couple, no kids, what makes you guys feel okay? In the same vein, I've got clients who have had 6 figures in their savings account. Well, that makes them feel okay. I do think there is, while there's not necessarily a right number, there is too much in the savings account.
Because it's not moving. So what we did
at a certain point is, what is it doing for you?
Right.
To me, the savings account's goal is to be there for you when you need it, not to earn. Well, at a certain point, you've got enough money there. And, to get money out of your investment account, it takes a week. That's it. It doesn't take 6 months to get money out of your investment account. It takes 1 week. You call me up on Monday, I sell it, trade date plus 2 days, and boom, I hit the button to put it to your bank account. Maybe 1 business day, your bank clears the transaction. So worst case scenario, you're looking at Friday. Okay.
So you got a little bit of cash on hand.
Why do you need 6 months of cash on hand? Maybe that is, we feel comfortable with 3 months of cash on hand. What I call the ransom money. I need to grab this. So my overall theory on savings: have a little money in the safe. That way you can grab that 24 hours a day. Have a little money in the savings account, because the savings account saves your investments. And then everything over that amount, whatever that amount is for each family, now we put to the investment account, and we just invest that, not aggressive, not super conservatively, just keep it balanced. and just keep it going. And once the savings account reaches here, it'll say if someone's putting away $500 a month. You don't need to continue to put it in your savings account. Now we put it into the investment account. And we just build that up because, again, the goal of that savings account is to be there, not to earn, not to just grow ridiculously. So you got $100,000 in your savings account. Yeah, we can do better stuff with that and still be available for you, because there are very few emergencies, I don't know if you can think of any, that you're going to need $100,000 for in 1 week's time.
No. And especially not that you could pay over time, right? It's interesting because you said that it's not doing anything for you. And so I had a conversation with my wife about that.
Okay.
Like, hey, we have 6 months of living expenses. Can we do something with this, right? So we started a CD ladder for that.
Yeah.
And so it's a rotating CD ladder, right? So every so often it becomes available, and we should be able to be okay. So no matter what's happening in our lives, we can like stop it.
Because every couple of months, something's coming due, or whatever the rotation is. Some people have it every couple of months. Some people have it every quarter. Some people have it every 6 months. Whatever time frame it is.
So we keep 2 months. So what we do is we have a buffer in our checking account. Checking account never goes below a certain number.
Right.
Then in our savings, which is the emergency fund, there's like, I guess that's a lie. We have an actual emergency fund. Then we have a savings account.
Okay.
In the savings account, there's like stuff for house. So we have like house improvements projects. And then we have like vacation fund in there.
Okay.
And then an emergency fund. We have 2 months of the emergency fund. And then 4 months of it is always working to make us more.
Gotcha.
And then after a while, once that CD is maxed, our plan is to take any extra and then invest that.
Gotcha.
Right. So we're always good to go. We end up having a bigger buffer than 6 months of expenses. So if something happens, like the economy goes bad or something, we have cash on hand to make wise investments with, while still maintaining 6 months.
Right. And so we spend a lot of time talking about that model.
Right.
How do you think it can work if husband and wife, no joint anything?
That's a weird concept to me. It's hard for me to imagine because for me, there's a lot of trust involved in you trusting the other person to manage their finances as well. I'm not saying that joint account doesn't involve a lot of trust as well, because you're also trusting the other person not to just run off
with your money in there.
And not even like on a control sense. It's more of like you pay your half of like the rent. Did they pay it? Right. So you got to check. Okay, they did. I don't know. It's hard I can't really imagine a separate account. My brain, when I try to do it, it just instantly is like, no. Right?
So here's a way that I dealt with a couple. They were, oh man, these people, this was probably 15 years ago. They were in their late 70s, early 80s. They've been married for 40 years.
Wow.
And they've ran it like this the whole time. 2 totally different accounts. They don't have nothing joint. Okay. He pays bill A, B, C. She pays D, E, F. Or whatever it is. I met a couple other people who do it according to income. Hey, this person makes more, so they pay A, B, C, D. The other person pays, E and F.
So like delineation of responsibilities.
Right.
Okay.
And so it's if the lights get turned off, you got the lights turned off.
What you've been doing.
Right. If the mortgage didn't get paid, hey, that's my fault. Because it's not, hey, let me give you my half of the light bill. It's you got the light bill. And that's the way they've done it. Okay.
I'd almost rather the mortgage, because eventually that ends. Light bills never.
Well, they gonna, hopefully they're gonna talk about it, then and go on about whatever the changes are.
Yeah.
But they ran it completely separate, and that's why I say there's no right way, because I've seen people run it jointly, and I don't want to pick on any specific place, but the same bar, restaurant, eatery, drinkery, whatever that is, whatever that would be called, the same place comes up daily in their bank account.
Okay.
Again, this is from my banker days. I see their transactions all the time. The same place every day. I mean, it came up so much, I think they ordered a drink and then closed out their bill. And then ordered some food and then closed out their bill. Same visit, didn't leave. Like they just paid for each item individually. That's how often it would come up in their transaction history. Well, there was also some issues because one person would overspend specifically there. It was like that's the only place they went. And the other person knew that they were there, and just said, hey, watch what you spend. So it wasn't, again, it wasn't about hiding anything, but it was, you weren't supposed to spend that much. Okay. And so like I said, I've seen it work both ways. I've seen it not. Back in beginning days of me in the loan servicing side, I used to do mortgages, car loans, credit cards. Okay, we would refinance the house or refinance the car. We would do debt consolidation loans, whatever it may be. So we would get really deep into people's credit reports. Well, a lot of times there would be some things being hidden. And here's what was hidden, and I'm just speaking stereotypically. Okay, the men would hide how much something was. Not that we had it, but how much it was. So we're gonna go get this boat or this Harley, top two things, okay? Boat and motorcycle. That's funny. It's only $200 a month. No, it's $600. Okay, it's really $600, but they told their spouse it was only $200.
And these are the separate bank accounts.
But no, this was on credit.
Okay.
Okay. So they had to run separate accounts because, at this point I wasn't seeing their transaction history. I was in the loan side only. So I'm seeing it from the credit report stance, and I'm hearing the ensuing argument after the credit report is seen by all. So he tells them, she knows that there's a loan on the boat or the bike or whatever it is, but it's only $200 or $300. It's really $600. And so he lied about how much it was. Argument happens. Hey, I'll give y'all the room. I step out. So we end up consolidating stuff up, hopefully making it easy. Go forward. Great. She would lie about a credit card existing. And he just found out about this $6,000 credit card, $5,000 credit, whatever dollar amount it was, didn't matter. He didn't know it existed. And okay, great, y'all gonna argue, I'm gonna step out the room. So when it comes to loans, to credit, that's where those things came out. So when in that sense, as we talk about merging financially, it's more than just merging our transaction accounts. How do you feel about applying for things jointly with the spouse?
Yeah. I think of marriages like businesses. In my mind, two entities, two organizations are coming together. So everything you do is actually joint. Right?
So that car loan, both of our names are on it. Yeah. If it's a car loan.
Because it's always, if you get a divorce, you're breaking up.
Yeah, you're splitting up a company. Basically.
Yeah. So debt and credit is, right?
Yeah.
And so in my mind, no matter what, you have to have a conversation about it. Do you need that loan? And if you do, where are you going to get it from? What terms are right
but what if I really want it? And I know that based upon my income, I can afford it on credit. So I just go ahead and go get it.
If that's how you want to run a relationship, that's up to you.
What if I know that if I get this credit card at this store, I get discounts when I spend? And so that way, when I spend a little bit more, I could just use that card and I can make the payment out of my Play Money account. I'm just giving you excuses that I've been told.
Okay, but again, when you're going for a credit, right? The other partner should know that there's this thing that exists, right?
Okay.
Even if it's your Play Money that's being used to do it, that's cool. No one can ask you questions on it as long as you're being responsible with it. Great, right? The problem comes again is the lying and the misdirecting, right? And that brings like a level of, you can't trust the other person now. It's like betrayal, right? And again, when you have two companies or two people coming together, it has to be a little bit, in my mind, of openness.
Yeah.
And so you can look at each other, and like you know this. When you look at what someone spends their money on, you can really get to know
You
them.
can see exactly what they value.
Exactly.
So not only should the person know about it, I think they should understand what that credit card may do. And so by having that credit card that even though your play money is paying for, now, and unfortunately I've seen this, that can stop a home purchase.
Okay.
Because that credit card, you may have racked up $3,000. Okay, that's a $50 payment. Well, sometimes people barely get approved for homes. And, $50 payment, that $50 worth of space in your DTI and your debt to income ratio can be the difference between congratulations, here are the keys to sorry. And again, I've seen that. Okay. So it's more than just, I didn't tell you about this. It's how can that impact us for our future? Now, hopefully we already have our house and all this is okay, fine. But what if we don't and we're planning on buying one? Now, your credit card, that's your credit card, impacts our debt to income ratio when we go try to buy this home together. Mm-hmm. Unless I just make enough where it's your credit card and your credit card is it, and I make enough to buy the house on my own. But now you're not on it. Or you're on it as you're on the deed. So you're what's called a vested non-borrower, right? It can complicate things a lot.
And they're newlyweds. So this is like, this whole thing is a new navigation.
It's brand new to them, right? Yeah. So with your potential new spouse, or not potential, soon to be new spouse, when do you talk about your credit scores with them? When do you open up
that's before you get married type of thing in my mind. Yeah. But let's say you waited, right?
Well, no, my wife and I got married. If you just got engaged, like I said, Valentine's Day just passed, right? Yeah. So weddings aren't going to happen until what, June, July?
And maybe that should be part of the conversation, right? Because that should also determine how big of a wedding that you have, in my mind, right?
Well, I don't think that a wedding should be big at all. At all.
Okay.
I mean, it's one day. Why spend $20,000, $30,000 on one day?
Agreed, I guess. It depends how big your family is. Sometimes you can't help it.
I don't care. Right. I mean, the family can all come together. Yeah. And now if you're spending it on food, man, that's a big family. But if why spend $20,000 or $30,000 and do, again, I'm just speaking off of history of what I've seen. You're gonna come in here and take out a loan for a wedding.
One day. Yeah.
And as hurtful as it is, sometimes I've seen that loan term last longer than the marriage.
Yeah, it's no lie.
Okay, so I'm gonna take out 20, 30 grand for 4 to 6 hours. I'm including the reception.
Just so you can go sleep at night because you're tired, because weddings are exhausting.
Right?
Yeah.
If I can come up with 20 or 30 grand, let's say I don't get a loan. Let's say I just got it.
Okay.
Let's say one of the parents paid for it. They chipped in on it, whatever it would be. $20,000 to start your marriage? What if the wedding and you paid for the food and you played a playlist off your phone, off your iPad or whatever tablet device? It was $5,000 for the food. And you did it in your backyard. And then you went and took a really nice vacation for $4 grand, $5 grand, first class of flight
total. Yeah,
you spent $10,000, but you done took a week vacation with a first class flight and had a really good dinner with all your family around, and you got pictures and everything to remember it. Maybe you don't have all the flowers, and that you're not gonna pay attention to and not gonna remember.
And that died soon after. Yeah.
But it's a man's point of view, and I'm sure the women will let me know. So, but it's like, I'd rather spend that money on an experience, on something longer than one day. Because I'm gonna love you regardless. I would rather go down to the justice of the peace and sign the document. Okay, great. Couple friends, hey, thank you for witnessing my signature. Boom, I done signed. Hey, she done signed. Judge such and such, we are married. Thank you. Let's go eat dinner. My family can come around and eat dinner. Let's go on vacation.
But these conversations can only happen if people are open to have them. I've learned that
they're about to be open to share their life together.
But many people are defensive when it comes to money or talking about finances, right?
Why do you think that?
Oh, I'm going to say I know, but I don't know
Why do you know that? I mean, I think we got at least 5 more minutes on the timer.
All right, this is why I know that. I speak to a lot of people
Okay.
about money management, and then just a sense of here's your budget, here's an expense report. Let's see how you're doing, right? And during those conversations, a lot of trauma comes up.
Man.
Right. I mean, I almost feel like there's a space for like a financial therapist, right?
Oh, there 100% is. We didn't close the door in the office quite a few times. I got tissue in there for that reason. That's why people will have those who make great income and great money who will have $100,000 in their savings account, because we never had no money growing up and we were struggling so hard. I never want to be there again. And so now you're making what I consider to be not necessarily a poor choice, but not a smart choice, not an informed choice for your current situation based off of past trauma.
Defensive choice. And sometimes those same walls that protect you.
Yeah. They can hurt you.
So, and so you just got married, so you're on that, or you just got engaged, excuse me, you're about to get married. So you're on that, oh, we love each other high,
Right.
And everything's going to be bright. It's going to be amazing.
Perfect. They can do no wrong.
Exactly. And then you start talking about money. I mean, sometimes that brings up a lot of shame, because sometimes people don't know how to manage their money. And let's say one partner does. One partner is good at managing the money. The other partner is good at spending their money, And so then that conversation can be really hard.
Well, I do think that you need a balance between the two. Because you got to save and invest and do all that good stuff, but you also have to have fun too. I agree. You got to have fun, because if you I was just talking to the wife. I haven't taken a vacation now in like a year and a half. I'm itching. It got to happen. Yeah. Before the end of this year, I got to go somewhere. Okay, because you got to go recharge your battery, and that vacation, going back to the first part of the conversation, that's in the our money bucket. That's for us. Now. Debatable whether some will say, I need a little, extended weekend on my own. You need an extended weekend on your own. You can
save up for that with your
debatable. But us taking a vacation together, I would not even call that. That's a non-negotiable. And right now, shame on me. I've negotiated that for the last 2 years. So I need to get better. I need to be better. I need to go somewhere. Shoot.
Too many of mine are visiting people. So I'll go visit a friend in Georgia or wherever, I'll fly to the other side of the country and go visit people that I care about. Now, sometimes that's a vacation. Sometimes it's a lot of work, Yeah.
Yeah. And you got to recharge that battery though.
Yeah. And that's all out of the house account.
Okay.
Right. So we have vacations, and part of our budget is goals or vacation destinations or something, right? And so we have his and her vacation goals and our together ones, right?
See, now this is something interesting. Ideas are happening fresh right now, so I think I'm gonna have this same conversation again with the other side, with the female.
Oh, I would love to watch that and hear that.
And be able to kind of glean that piece, because we got a lot of male energy in the room right now. so to have that with the wife side of the equation, it'd be interesting to hear. I've only, being in the bank, I've had it with both of us, and sometimes I talk about this with here very recently with a client, female, who is what I'll say has more of a male trait in this sense, where she's like, no, this is my money only, and not sharing anything, and I need a prenup, and it's like, and I'm saying it like that because you typically see men are the ones historically being taken advantage of when it comes to money, because when divorces happen. Unfortunately, divorces happen a lot, and their main causes coming from a therapist are sex and money. Those are the top two causes of divorce. Or arguments, excuse me. I think those are also the two causes of divorce as well. But when divorces happen, the men are typically the ones that are hurt more financially. They're the ones that either have to pay, either alimony or child support, stereotypically speaking, or when like you said, hey, all the assets and all the liabilities, we earned that together. Well, when it's time to split them up, she will typically get a bigger share of the assets. And again, I've seen this far too often. So it'd be very interesting to have that other side of the perspective, and then maybe we'll do a third one and have it all together.
Yeah,
so we'll do some little financial therapy together, and kind of see how that goes. But yeah, so you've heard a couple of different viewpoints with putting money together, with having it separate. It can work both ways. You just have to have a conversation with your person and see which one's going to be best fit for you. So until next time, go ahead and hit that like if you found this entertaining, informational. Go ahead and also email us at Elwis, ELWIS, at johnsonwealthadvisors.com. It's right on the website, johnsonwealthadvisors.com. Submit your questions, anything else that you'd like to hear us talk about. We got a couple waiting in the queue right now, actually. Look out, we're going to be talking about credit specifically pretty soon, and I'm bringing on a credit repair specialist for that. But anything that you want to hear about, by all means, please submit it. Anything you want to say to the people?
Appreciate you for joining us. Hope to see you next time.
And if you need some business information and get that stuff formed, you know who to reach out to. Until next time, thanks for joining. See you later.